Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, Coindesk Managing Editor of Global Capital Markets, Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Good morning.
Bitcoin above 42,000 over the weekend. Very exciting stuff. But let's check in on Bitcoin right now. The Coindesk Bitcoin price XBX index is currently trading at $39,293. Bitcoin is down about 5.5% over the past 24 hours. And the Coindesk Ether price ETX index currently trading at 25.88. ETH is slightly down about 0.4%. And the new DFX Coindesk's DeFi index right now at 543. DeFi is down almost 1.5%. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as a leader in crypto news events and data. So again, Bitcoin breaking 42,000. Also, crypto Twitter is completely frenzied over this infrastructure bill being debated in U.S. Congress and its implications. Lawrence, what's going on with Bitcoin?
I mean, part of it is there is a liquidity issue involved. We had a great story today by Amkar Godboli about that. But this has been something, we're seeing some weird things happen in the exchanges over the past few days. There was some movement in Kraken. Kraken supposedly said that everything was just, scheduled maintenance, et cetera. But, these kind of things, while they could be scheduled and while everything is what could be expected. Nonetheless, when computers at least see these kind of movements, and traders see that stuff without knowing the context, it could spook it. But there could be other things afoot as well. But that fewer Bitcoin out there to buy on the exchanges. Certainly,
in Congress, something is afoot. They have the infrastructure bill that could enhance reporting requirements for people in the crypto industry. Also, out of the blue, there's a new crypto bill, Emily, where a U.S. lawmaker who previously showed little interest in cryptocurrency suddenly has this very comprehensive legislation on it.
Yes, our colleague Nick Day reported that this was the most comprehensive bill ever as regards crypto. What we don't know is if this bill has any likelihood of passing. But, I think most people would think that this is a good sign because the bill is addressing a lot of concerns that people have had about crypto in the United States, notably the lack of clarity and the lack of clarity about who is regulating what. So this bill does lay out a lot of guidelines for whether the CFTC or the SEC or whoever would be regulating certain exchanges. So the question is does it have any chance of passing? And I don't think we know that yet.
Right. Well, as U.S. lawmakers look to regulate the digital asset space, a couple of bills, as I mentioned, have been proposed that could have enormous consequences for the U.S. blockchain industry. The U.S. infrastructure bill could rope in wallet developers, manufacturers, and even miners into enhanced reporting requirements, while Representative Don Byers' proposed bill could grant the federal government the ability to ban some stablecoins. And joining us now to discuss is U.S. Representative Tom Emmer from Minnesota. Welcome to the show, Congressman. So this new infrastructure bill seeks to raise about $30 billion from crypto investors by applying new information reporting requirements to exchanges and other parties. It expands the definition of a broker to include, quote, any person who, for consideration, is responsible for regularly providing any service effectuating transfers of digital assets. So this could mean software developers, manufacturers, and even miners, as I mentioned. Some suggest it could effectively ban mining in the United States. Are these real concerns?
They should be, yes. First off, there's another version of it this morning. The one that you're referring to, my understanding was expanding the net. The new one is trying to define certain things, but they both have the same impact. They will serve, if this is the approach that the Senate and ultimately the House decide to take, they will be frustrating innovation in this country and potentially sending entrepreneurs looking for places other than the United States of America to start these new and wonderful opportunities.
Congressman Emmer, we had the decentralized exchanges. How are they going to be affected in all of this? When you define what a broker is, it's not really a place. It's not really a person. It's software just doing all these kind of things. How are they affected by these new rules? And why not define what a broker is in a way that comports with reality?
So, Lawrence, it's a great question. But first, let's start with the fact that you've got a infrastructure bill, which arguably should not even be related to this area. This is a desperate attempt by a bunch of senators to try and find revenue from any source they can. And quite frankly, if it weren't for a couple of years back when they violated this, the old rule that it has to be related to the area that you're working on, they broke into the finance area by taking, I think it was of the 6% that banks get for keeping cash on deposit with the Fed, they took approximately 3% of that to start paying for infrastructure. This is that same concept now. And the problem you've got is they want to cast as broad a net as possible, Lawrence. I think you should be really concerned about the fact, I think Christine mentioned minors to begin with, but let's talk about peer-to-peer. You and I could be doing a peer-to-peer transaction, and somehow we might fall within the definition that they're expanding. So now we're going to be responsible for not only new registration requirements potentially, but a whole truckload of regulators that are going to be coming down on us, right? Where are you going to do business, Lawrence? You're going to look for another place where it's more clear, there's clarity, and there's opportunity, and that won't be the United States of America if they move forward with this type of a framework.
Well,
Congressman, just if I understand correctly, are you saying that crypto should not be in this bill at all, or do you have specific revisions that you are recommending?
I don't think we should be paying for a major infrastructure, Emily, with cryptocurrency. I disagree with that. If you look at this, and it's early, granted, it just came out last night, but my understanding is you're going to try to pull about $28 billion in revenue out of the crypto space, and really the only thing that's arguably related would be broadband expansion across this country, which I think they've given about $65 billion to. So I have problems with that. I have problems with, okay, you're going to do that. How does that impact a peer-to-peer relationship where we've already got these arguments about stablecoins and who's got jurisdiction over stablecoins? It's going to open up a whole new Pandora's box, which I think the problem you have, Emily, when you do this is more regulators get involved. It seems like they all want a piece of it. The more regulation causes opportunity to leave our shores.
Congressman, you mentioned stablecoins, and Representative Don Byer's bill could grant the federal government the ability to ban some stablecoins and require digital assets and securities to comply with anti-money laundering, record-keeping, and reporting requirements. I'm just wondering your thoughts on this bill, this very comprehensive bill introduced by Representative Byer, and the likelihood of passage of this one, as well as the crypto-related provisions in the infrastructure bill.
Yeah, look. Don Byer hasn't been involved in this space at all that I know of. We've never had a conversation about it. And all of a sudden he comes out with this proposal that would give the Fed complete control over creating a federal central bank digital currency with all kinds of related authority to it. Look, this to me is the China model wrapped up in red, white, and blue. This is a constitutional republic. We're supposed to be able to exercise our freedoms. China's using this to collect information on their citizens, and they're trying to exert control over them. It's a huge mistake to go this route, and I find it very interesting that Don Byer, who really has no history of working in this area, has suddenly taken an interest. That being said, I look forward to working with him on it and trying to explain to him how potentially dangerous this approach is.
So, Congressman Emmer, tell us how the sausage is made here. When did Don Byer get involved with crypto? Like, who pulled him aside and said, "Okay, here's what you're going to do. Here's a bill for you to throw your name on and get this going"? How did this bill develop? Did anybody know about it? Who put him up to it?
It's interesting, Lawrence. This might be along the same lines as the digital working group that Maxine Waters suddenly created out of thin air, despite having committees that are already working on this issue, bipartisan committees. She created this Democrat-only digital working group. Perhaps that's where it came from. call me suspicious if you want, Lawrence, but I think that sometimes somebody at Janet Yellen's Treasury would call a longtime ally like Don Beyer and say, look, we really need to push back on these Republicans who are talking about decentralizing this, who are talking about peer-to-peer permissionless and anonymous transactions. And the problem that they've got is they want to bring our peer-to-peer. It's one thing, as I think it was Christine was saying it, on the know your customer issue, but that's great. That applies to financial institutions. It should not apply to you and me, Lawrence, when we've got a peer-to-peer transaction. This seems to be a very broad net, which has some very dangerous consequences when it comes to destroying innovation. And if they move in this direction, potentially collecting information on people like you and me that are participating in this area.
So you think it was somebody from you think it was somebody from Treasury who put this, who put up buyers up to it, who put buyer up
Lawrence,
to it?
you can tell I'm smiling. I'm suggesting that sometimes that sort of thing happens. I don't know that yet. This just suddenly appeared last week. Suddenly came on the scene. It was like, where did Don get this? Don has never participated in this. And I can tell you that members of the Bipartisan Blockchain Caucus and several of us that have been working in this area for now, getting on 5-6 years, if Don had an interest in this, I'm sure we would have had that conversation long before now.
Congressman, so the buyer bill, there's just so much in it. I mean, there's so many different suggestions in there. You're talking about the central bank digital currency, but is there any elements of the bill that you do support and that you do think would be good for the industry? And also, just like, how likely is this bill to even become a reality?
That's a great question. I don't think it's very likely, but when human beings are involved, Emily, anything is possible. Look, the good news about this bill is it's bringing more people into the discussion. This is what we've been fighting for the last 5 or 6 years. You know, it started out with crypto is just a passing fancy, and they related it to things that had happened in the past, Silk Road type stuff. They tried to give it this negative connotation. Guess what? Crypto is here to stay, and I think the Don Beyer bill is recognition that crypto is not going away. And so now we're going to have the real discussion. I wouldn't tell you that everything in that bill is a non-starter. We've just started to dig into what they're doing. You can tell, Emily, that I have some serious concerns about government getting involved in transactions between private citizens and demanding too much information on those transactions. So that's where I've started. But I'm going to tell you, I'm not going to paint with a broad brush and just say everything in the Don Beyer bill should be ignored and discounted because we haven't had Don participating in this space. No, to the contrary. I think this is a great thing, however it happened. You know, as Lawrence and I were having the discussion, who cares? Don Beyer has stuck his toe in the water. I would say to my other colleagues in Congress, come on in, the water's nice. We have to have this conversation, and we have to be really thinking proactively, because if we don't, the whole reason we have leaned in so hard into this space is because we are desperately concerned, and it really wasn't helped last night with the Senate's infrastructure bill, that they're going to put the wet blanket of government on this emerging industry and cause opportunities and investment to leave our shores. We just can't have that done, Emily.
Wow.
So good for Don. We're going to have the discussion.
We have to wrap it there, but thank you very much for keeping us apprised of what's going on in D.C., and we hope you have some impact on what happens going forward. Thank you for coming on the show. All right, that was U.S. Representative Tom Emmer. Coming up, checking in on Asia and a crypto markets update with crypto investment manager Arca.
From fueling local economies to connecting global markets, the future of money is taking shape now. Crypto State by CoinDesk will bridge communities of crypto investors, thought leaders, and developers to tell the global story of decentralized finance. Join us for this virtual event series as we make stops in Israel, Bahrain, and the United Arab Emirates to dive into the movements that are disrupting markets and changing communities. Register today.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, August 2nd, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Coming up, China's central bank to maintain pressure on the crypto market. China clarifies legal validity of blockchain evidence, and J-pop's cryptocurrency girls offer NFT advice to consumers. Let's get you up to speed from Asia to the world. While China is not letting up on crypto, China's central bank has unveiled its plans for the second half of the year, with pressure on cryptocurrency trading set to continue. The plan, published by the People's Bank of China, or PBOC, following its work conference, lays out 8 key tasks, and crypto is featured prominently in one of them. Task 7 on the list states that the bank will maintain pressure on virtual currency trading hype, noting that there has already been a severe crackdown on illegal activities. Orient Capital Research, which analyzes China's macroeconomy, particularly shadow banking, told us at Forecast News that that means the private sector will likely be pushed to one side, while the PBOC develops a better understanding of digital currencies.
They're not going to have much of a role until maybe a year from now when the dust settles. It is possible that the central bank will then say, okay, look, we now have the plumbing in place. We know how to control it. We'll allow some private sector companies to enter into this as retail parts of the plumbing, as long as they know how to toe the line.
Meanwhile, the bank says pilots of the digital yuan will be expanded. Collier says that he expects to see the PBOC outsourcing some digital currency operations to state-owned banks, as they not only have the capacity, but are under the control of the government. Other tasks on the list include improving the green financial system and promoting internationalization of the renminbi. Staying in China, the highest court in the land has clarified the legal validity of blockchain evidence. The Supreme People's Court shared its People Court online litigation rules, which came into effect on Sunday. And for the first time, the court outlined the scope of validity of blockchain evidence. Now, blockchain evidence is mentioned in 3 of the articles in the new rules. One clarifies the presumption that data has not been tampered with once it is stored on the blockchain, while the other 2 clarify authenticity verification rules for blockchain evidence. China's Supreme People's Court had already recognized that blockchain evidence was valid in a regulation issued in 2018, but that gave no clear details of just what was acceptable at that point. Blockchain in law is on the rise, according to an article published by Albright Law. As of March 2021, 65 cases used blockchain evidence in China. And on the first trading day of the week in Asia, after reaching its highest price since May over the weekend, Bitcoin has fallen just over 3.5%, sitting at a little over $40,000 as of 4 p.m. Hong Kong time today. The fall followed uncertainty over whether crypto will be taxed more broadly in the U.S. An updated version of an infrastructure bill suggested that new reporting requirements could broaden the range of crypto transactions subject to tax. That mood filtered through to the top 10 for cryptocurrencies on a mixed day. Dogecoin down just over 4.5% and Cardano down just over 2%. And finally, some sage advice over the risks involved in buying NFTs from a most unlikely source: pop stars. Japan's cryptocurrency girls J-pop band made headlines in 2018, singing zany songs about virtual currencies while wearing outfits adorned very appropriately for their look with various token symbols and insisting on getting paid by their talent agency in crypto assets rather than fiat currency. After going a little bit quiet since, they're back to explain what NFTs are, as well as offering a warning to potential purchasers that comes in the form of their latest song, NFT the World.
But you must be very careful when you want to buy. There's no guarantee after getting data, even if it's not fake.
Of course, now they've explained everything. You're all set to make your own decision on whether to buy one of the band's NFTs, due to be released this month. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. NFT Crypto Girls. Just want to say Lawrence would for sure appreciate that. All right, so checking in on Bitcoin, the Coindesk Bitcoin price XVX index currently trading at 39,287. Bitcoin is down about 5.2% over the past 24 hours, and the Coindesk Ether price ETX index is at 2584. ETH is slightly down about a tenth of a percent, and the new DFX Coindesk's DeFi index is trading at 542. DeFi is down just over 3% over the day. All right, and joining us now to discuss the crypto markets is Jeff Dorman, Chief Investment Officer at Arca, an asset management firm. Welcome to the show, Jeff. So over the weekend, we saw Bitcoin breach $42,000. What do you make of the bounce and where it's headed now?
Sure. I mean, there's been a lot of positive developments over the last few weeks, and you know, the market got very offsides, thinking that from technical analysis and other reasons that the Bitcoin was going to crash. And when you have a combination of a lot of shorts in the market, expecting a certain direction, combined with positive news like the fact that there's been massive fundraising rounds in the private markets, everything from FTX getting an $18 billion valuation to OpenSea getting a $1.5 billion valuation, as well as a string of announcements from Wall Street, from Bank of America, Goldman Sachs, GoldenTree, as well as Main Street with Robinhood and Shopify. There's just too much positive news and too many negative, or rather shorts out there that are offsides of the market, that when you start to get a little bit of momentum to the upside, it starts to break and you start to get real liquidations on the short side. And that's what we saw all of last week.
So crypto Twitter, just sort of the crypto world is all aflutter about these bills in Congress, like the infrastructure bill and also the Don Beyer bill that's a comprehensive bill about crypto. Is the market really paying attention to these developments, or is it kind of on the side?
I mean, the market's definitely paying attention to it, but I mean, what are we going to pay attention to? I mean, this has been a regulatory overhang or cloud over the market for 3+ years. Just like it was ridiculous that the market would trade up every time Elon Musk said something, even though he said the same thing over and over again 12 times in 2021. The same is true on these legislation bills. Like, we know regulation is coming. We know legislation is coming. How many times is the market supposed to react to the same news, which is something is coming, we just don't know what? As I like to say it, bring it, don't sing it. We don't know what this final bill is going to look like yet. It is going to take a long time to pass through Congress, as everything is that goes through Congress. Ironically, a lot of us left traditional Wall Street because we were tired of only trading when the Fed or Congress said something, and here we are again in digital assets being held by uncertainty. Mm-hmm. So yeah, we're definitely looking at it, but there's nothing to make out of it yet that should drive price action other than fear and guessing.
Jeff, Arca also has some news recently announced. You're launching the first actively managed income fund in the digital asset space. Tell us a bit about that.
Yeah, so a lot of you're starting to see a lot more press talking about the yield that's available in digital assets. When we started Arca almost 4 years ago, we always had a vision of having multiple products to serve different risk rewards and to serve different investors. Well, the investors who like venture style returns have been in the crypto markets for years now, right? Looking for these high upside opportunities. What we haven't seen yet is the fixed income investors, or those who are looking more for 5 to 15% yields that are just not available anywhere else in the market right now because of cash being worthless and fixed income, investment grade bonds trading well under 3% and fixed and high yield bonds trading well under 5%. There's just nowhere to get yield right now. So what we wanted to do was take advantage of these yields that are available through a variety of different channels and digital assets and offer it in a product available for accredited investors and high net worth investors, where they can access the digital asset market, but in a completely different way, in order to earn passive income rather than looking for the higher volatility, higher returns. And because we've been in the market for so long and we have operational infrastructure, the compliance, the regulatory focus, and everything that goes with investing in this space, it was a natural next product to offer to different types of investors who have yet to get involved in this market.
Jeff, I wanted to get back to something to what we were talking about earlier. We've seen some Bitcoin leave exchanges over the past few days. Where's it going? What do you think is happening there? And is it actually a big concern for the market?
That it's leaving exchanges?
Yeah.
I mean, I don't know why that would be a concern. I think all the data is telling you is that most investors don't want to keep anything on an exchange if they don't plan on doing anything with it for the foreseeable future. So all that means is that people who are owning Bitcoin are taking it off exchanges and putting it in cold storage or custody or other places where they just plan on sitting on it and doing nothing. We've talked at length for years how Bitcoin is a really boring asset that people love to talk about. There's nothing to it. The change, the story hasn't changed. You either believe that this is going to be a future medium of exchange or a store of value, or you don't. And everything along the way just indicates the probability of success or failure as we either head to $500,000 per coin or we head to zero per coin. So a lot of the focus on the data on Bitcoin is just shuffling deck chairs to one of those ultimate goals. I think, to see it leaving exchanges is simply indicative of more longer term investors putting it away, in their drawers and doing nothing with it. I think some of the data.
Is that the only possible? Is that the only possible reason they would do that? In other words, are they leaving exchanges for other uses?
There's not a lot of other uses
for other reasons.
What other uses are there? I mean, there hasn't been a lot of other uses for Bitcoin in a decade. If you were talking about Ethereum leaving exchanges, yeah, that would indicate that it's probably being used for NFTs, or it's probably using to generate yield within decentralized financial applications. When Bitcoin leaves, it's just, you're putting it in a sock drawer and you'll come back and look at it again in 2 years.
All right. Jeff, thank you so much for joining us, and congratulations on your new fund. Appreciate your insights.
Appreciate you having me. Thank you.
That was Arca CIO Jeff Dorman. Coming up, Facebook wants to become a metaverse company and diving into Congress's infrastructure and crypto bill with CoinDesk's Nick Day.
CoinDesk Indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. So we've got this infrastructure bill in Congress as well as this new buyer bill. Do you have any updates for us?
Yeah, so last night the Senate finally unveiled the $1.2 trillion infrastructure bill, and like a previous, draft, it does look to raise about $28 billion in taxes through cryptocurrency information reporting. It is a little bit, tiny bit narrower than what we, previously saw. Originally, DEXs were going to be included as, parties that have to file information reports. Now it's just saying, brokers are, anyone who provides transfer services for cryptocurrencies. So it's a tiny bit narrower. It doesn't, explicitly exclude miners or node operators or, what have you. So there's a lot of controversy still within the crypto industry, I think. People are going to try and get language to the effect that, they specifically want those types of entities excluded because they can't provide information reports like exchanges can. And one of the senators working on this, Senator Rob Portman of Ohio, has actually, he said in a press statement, or his spokesperson has said in a press statement, that they don't intend to capture miners and, the like. So I think the next step is seeing how that exactly makes its way into the legislative history of the bill.
Nick, you're right that everyone in crypto Twitter is talking about this, and there's been some media reports. Is the media getting this correctly, or is there something that they're getting wrong?
So I don't want to point fingers, but there are a lot of reports out there saying that the issue here is, an increased tax on crypto that crypto people don't want to pay. And that's not really the case, right? It's, it's not implementing new taxes. It's expanding the definition of a broker, meaning, who is responsible for transacting here or, carrying out this transaction. But it's doing so in such a way that parties that aren't what you would consider a broker getting captured as well as actual exchanges. So, it makes perfect sense that exchanges, OTC desks, and the like would have to file these reports. They're providing transaction services on behalf of customers. But you're not seeing, again, miners and node operators, for example, as the big ones. They're not providing transaction services for customers. So it is a little bit more difficult to figure out how exactly they would file an information report and pay taxes on top of that.
Hey, so Nick, I don't know if you caught Representative Emmer just a couple of minutes ago. He made a reference to what was going on with Don Beyer. He thinks that maybe perhaps somebody put him up to it, and he hinted it might have even have been Treasury. Is that possible? Did we have any indication that somebody, let's say in the administration itself, may have just slipped this bill on Beyer's desk and said, "Here, put your name on this"?
So I think generally speaking, I'm sure congressional staffers interact with the Treasury Department or whichever department might have oversight of, a specific issue when they're trying to draft a bill like this. And it's pretty clear that a lot of research and effort went into the bill, just the sheer comprehensiveness alone suggests that. I don't know if it's, if the Treasury Department came up to the representative and said, "Hey, we have this bill. We want to take, complete control over stablecoins. Please help us out." But I'm sure, at some point they must have been consulted at least, for a suggestion, "Hey, if this were to be included, what would your views be?"
All right, Nick, thanks for the update. Looking forward to continuing monitoring the developments in your newsletter tomorrow. That was Coindesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on Coindesk.com.
The Coindesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
The metaverse is quickly becoming one of the most trendy buzzwords to put in this year's pitch deck. Over the next 5 years, even CEO Mark Zuckerberg predicts Facebook will transition from being a social media company to a metaverse company. Joining us now to discuss is Chief Metaverse Officer Cathy Hackl at VR consulting firm Futures Intelligence Group. Welcome to the show, Cathy. So the metaverse, for those uninitiated, is the virtual world on 3D platforms like Decentraland and Roblox, where your physical form is transported into a digital one, and you can socialize, buy and sell virtual real estate, clothing, and social experiences. So, Cathy, who is using this world right now, and how developed is it?
Yeah, I'm excited to be here. So a lot of different people are using, metaverses right now. And I think that we need to kind of look at the metaverse as a broader picture, not just virtual worlds. We need to think about it as the future of the internet in some ways, right? So what comes after the mobile internet? So it's a little bit broader than just virtual worlds. But currently you have, lots of people investing lots of money, in these virtual worlds, whether it is NFTs or whether it is virtual real estate in the form of an NFT. Lots of things happening in the gaming side with play to earn. It's kind of an area that is growing and increasing and becoming more important. But we do have to look at it from a broader perspective and look at it as involving both our physical world, which is the most exciting part in my point of view, and the virtual spaces.
So right now, the metaverse is still sort of considered this like kind of cool thing that is like very new and a little bit on the edges. Like a lot of people don't understand it or know how to access it. But, as Christine mentioned, Facebook has been in the game since the beginning, and they're talking about kind of like amplifying their efforts. So is this just going to kind of become a repeat of what's happened to social media, where Facebook basically comes and like colonizes the metaverse, and not just Facebook, but like Facebook and other big companies like that?
Well, I think everyone's hope is that it doesn't happen the same way, right? That things are a little bit different this time around in Web3. One of the things that Mark said when he was doing that interview with Casey Newton was talking about it being interoperable and open source. So that's, to me, a big signal, at least in some ways, of the view that, we want an open metaverse of sorts where, you can be an avatar and you can transfer your avatar and your digital goods to a different platform. You're not kind of stuck in a walled garden. Whether that happens, that's still too, we still don't know. It's too early. But I do want to let people know what, the metaverse is a sci-fi term, a term that comes from sci-fi, but it's really about thinking about Web 3.0, about connecting people, places, and things, and kind of where we're heading. And And it's really about digital ownership as well, which is really exciting.
Great. Looking forward to my grandparents using their Facebook Metaverse coming up and posting things. But what does this all mean for crypto? So how's the tie-in? Can you expand a little bit on that, like the tie-in from this world to crypto?
Yeah, so when I mentioned digital ownership, right, crypto and NFTs, especially NFTs, are kind of the end game of sorts. That's what a friend of mine calls it, the end game in the metaverse space. So it's about digital ownership and being able to know that you own something. As we move forward in this Web 3.0 world, in this metaverse, in this future of the internet, let's call it, a lot of the things that we purchase right now, are going to be digital, are going to be things that only exist in a digital form. So whether it is a dress, a virtual couture, or whether it is an NFT or whatever it is that I'm buying, I need to have proof of ownership, right? And that's kind of where I think, crypto and blockchain and NFTs kind of come into play in showing that digital ownership. So, when we think about the metaverse, we don't have to just think about gaming. We need to think a little bit broader and understand that the metaverse involves AR, VR, it involves IoT, involves 5G, involves crypto. And crypto is, going to allow for that peer-to-peer exchange, for us to be able to have, transfer digital assets, and to be able to have digital ownership. So NFTs obviously are a big part of enabling the metaverse.
Cathy, we see so many people spending so much time on their phones, screen time, if you will. And are we headed to a world where it's going to be nicer to be in the metaverse than in the real world, like we see in some films like Ready Player One? Maybe in space, for space travel, it might be nice to be in the metaverse for a while rather than in a space rocket. Your thoughts?
So while the concept of the metaverse is informed by sci-fi, I kind of reject the idea that we're all going to live in VR headsets the whole time. I see the metaverse, like I said, as a broader view. So people tend to always have that dystopic view of Ready Player One, kind of we all live in this world because our world is just not exciting. I don't see it that way. We have to really look at it broader. Rather than just VR, we have to think about, spatial computing, which is obviously another term, but AR, and thinking a little bit about how our physical world is going to be amplified with digital content. So that's why I think augmented reality starts to play a really big part in the metaverse, right? So I definitely urge caution and have people, not necessarily think so dystopian, but think a little bit broader and about breaking free from our phones and our computers and having digital content in front of us that could be really exciting, could make our physical world, even more enjoyable.
Okay. Cathy, fascinating stuff. Thank you for joining us and breaking it down for us. That was Futures Intelligence Group Chief Metaverse Officer Cathy Hackl. Time now to check in with Crypto Twitter with our tweet of the day. This one from Niraj Agarwal, who's the communications at Coin Center. They're lobbying Congress, tweeting, people are framing the infrastructure bill issue as, crypto people are just mad about taxes. That's not the issue at all. It expands the definition of a broker to all sorts of individuals who would never be considered one in any other context, and in most cases can't even comply. All right, that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.